Welcome to readtheticker.com. Today we're going to talk technical, looking at a stock called Salesforce.com. The symbol is CRM. We're looking at a weekly chart. The red bars are lower closes and the blue bars are higher closes. We have weekly volume. We have our trend indicator. Dark green is 2-year highs. Light red is a light sell-off. Light green is a light high. Darker green is a new 1-year high. And down below here we have an indicator called RTT OBV. Parameters are flat and the 3 EMA. Now what this RTT OBV does is it, like a professional boxer who judges punches in a boxing match, it judges price action by the bar. The lower the close and the higher the volume, the higher the better the punch, either down or up. For example, here we have a low close on very high volume, so there's a very powerful punch down. Okay, and here we have a very high close on just average volume, but it is a build up of 3 or 4 bars of average volume. It punches up higher. This one bar, high volume, lower close, did a big move all by itself. So that, like in a boxing match when two opponents are going off at each other, it's the punches that do the damage, like punches doing damage to a trend. Low closes, high volume. It's how you can judge whether price action is actually doing any damage to an intermediate, to a trend or not. Okay, as we can see through here, we have lots of low closes, some volume above average, and it shows that the punchometer or the RTT OBV is showing that these closes in the selling is doing some damage. It is recording. And obviously as the selling occurs, the sellers realise they're pushing prices down against themselves, so they're booking less and less profits. They allow prices to bounce between here and have another go, do some selling between here and here, here and there. That's alright. So selling in this period here, and selling in this period here. Okay. Now one of the 3 factors of determining a Richard Wyckoff technical strength is that the selling must dry up. The demand, the buyers accumulate the selling, and shorts have enough time to accumulate a position that they would be forced to cover if the trend continues higher. That is a build-up of buying power, and when it's released, forces prices higher. Prices can go higher on pure demand, shorts covering. Okay. Right. So what we have here is that you've noticed in the in this period here. Sorry, hang on a second. That's it. In this period here, that the punches down by the red bars have deteriorated compared to the zone here. That is an example of the power of selling drying up. And in this action here, I'm drawing a box for my quick draw tools. Here is where for 3 or 4 weeks the selling power completely dries up. The demand side and the buyers are sitting by there and going, well, we haven't seen any selling for a while now. There's no one in our way. There are no roadblocks. So when we start buying stock to push prices higher, we do not expect any selling at higher prices. And they waited 4 weeks to 3 weeks to see what's going on. They realise that the sellers have done. So this particular area is also known as a springboard. I would say springboard through here. Here we have tightening of the range, and one side of the supply-demand spectrum is beginning to be able to show its hand, that the supply side is drying up, shorts will be forced to cover, and demand is preparing to punch higher. You can see that there because the range is tightened up, and any down bars have no effect, and the demand side would realise that in the pits and bidding on the screen. They said there's just no supply here. we're ready to go to hit it higher, hit the bids, and push prices higher. And they do this easily. They end up creating a sign of strength here that actually pushes through resistance to create a new high, a new 2-year high, if you can see the big fat green bar down here. So here we had supply drying up, shorts forced to cover, demand pushing our prices higher, and we get a sign of strength. And we hit resistance, we find out if there's any more supply available, because that's what happens when you go to a resistance. People take advantage of that and they want to sell into it, take profits. But here we see, as the volume dries up, that there is no selling pressure, there is no supply in the market, and there's no shorts gathering positions, okay, not pushing down. So here it's just completely free to mark prices up. There might even been a news event waiting, might have been earnings coming up there, but in 2 instances we've had no supply pressure to stop demand pushing prices higher. Okay, so we had a push up, volume subsides, now we're getting another push up. The reason why that is primarily is we're getting no supply over here is because all the sellers were done about here. They did all the selling they were going to do around here, and there was no one left to do any selling, and therefore the demand allowed the accumulation along the support line, and we actually ended up generating a very powerful Richard Wyckoff technical strength that was supported by strong demand holding up here, which brought up the supply. We had the sellers exhausting themselves, and obviously the shorts who took advantage of these highs, they built up a position that obviously didn't generate much profit for them. They were also forced to cover. So you had shorts covering, selling drying up, and demand ready to push the prices higher. Richard Wyckoff technical strength peaked here, ready to go, and this is the outburst of it. This is as good as it gets, folks. I just want to make one comment on the big fat wide green bar here. What I call that's called on the side is RTT steps. RTT steps is another technical indicator we like to refer to. You can hit, for example, in my remind me box, I've got a steps to a park bench or a bench or what have you. And you see it's just like a stepping motion. Price breaks higher, resistance becomes support, and that's what we want to see when prices are moving higher. We want to see prices breaking higher, resistance becoming support, supply drying up, and demand having the ability to push prices higher again. And let's have a flashback here. Here's another step. We've got a bit of strength out here. And as you can see in this zone here, there really is no supply. You can see that there. Puncher meter. Whoops. There's no pressure down there in this zone here. So price is always going to attack resistance. At this point here we had approach resistance, we approach resistance, but we've got a fat bar down, very strong bar, it pushes, and it pushed and it proved that sellers were still around. Okay, sellers showed themselves here, proved them down here, and quite frankly, the other thing you should note is that selling waves do turn up in a sort of form of ABC, you know. This is very rough. So here we have A, B, C. I suppose it's an A and multiple B, A, B, C's up here. A, B, C, A, B, C. There's a couple of A, B, C's in there. Selling starts first. They allow prices to bounce against them and have another go at selling because they don't want to do too much damage with their selling to push prices down too low because they want to maintain their profit. So ABC is a common technical state on the chart. Alright. Back to the steps. I was talking about steps. That is a good indicator to use. It shows that price overall is stepping up in this weekly chart of bar action. shows once again that the stepping motion is still showing good health, and we are going higher. To work out how far we're going higher, we have to use a point and figure chart over this base period here. But first you do it over this period here to get a point and figure count projection. Use the shortest cause to determine your effect. And once that, I think we'd probably at least be hitting 100 or getting 90, between 90 and 100 on this build up of price accumulation. So really, as I said before, this was an example of a very large cause with a springboard, prices shooting higher, and in this cause it showed a brilliant example, of Richard Wyckoff technical strength, where sellers exhausted themselves, shorts most likely built up a position that did not generate profits, they had to cover, demand accumulated what was selling, built up their stock float, and when they realised it was done, in a minor springboard action here, they found it to push up here, and the enthusiasm produced a sign of strength. It generated another springboard that once again broke into new highs. A very good example. Thanks for watching.